teşekkürler. Yanımda konuğum Michael Block, Rhino Trading'den. Michael, thank you so much for coming.
Great to be here.
We will start with this famous article, the bubble paranoia.
Yes.
Meaning, are the US stocks on the verge of a bubble paranoia bubble? Is that true? Do you believe in this?
I do not think the U.S. stock market's in a bubble or approaching a bubble. I do think stocks are fairly valued here. I do think they can go higher from here, and I am looking for a slow grind higher in the intermediate to long term. When we think about bubbles, people look at the large deals being done, first of all, and the article you're referring to talked about how Rupert Murdoch and Fox is looking to buy Time Warner. I look at a deal like that, and I see great strategic sense there in terms of how the world's evolving in the US, but I think we can apply that to Europe and the rest of the world as well, where content is king. And what the content providers are realizing is the more is the better, success begets success. And there's this environment where if you can become bigger, you have more leeway over the distributors of said content. Rupert sees that, and even the head of Time Warner sees that. So I think we're going to see more big content deals getting done, and it makes strategic sense for shareholders and even for consumers, I would argue. It makes a lot of sense that they're going to have more choice. They're going to be able to choose what they get to see, when they get to see it, and it all works out well. The other part of that equation is the distributors, whether it's the cable providers, the telecom providers, again, in the US, in Europe. This is all playing out maybe in different ways in the different countries and continents. But this is the way the world's going, where a cable provider in the US, like, say, Comcast or Time Warner Cable itself, or Verizon, the telecom companies, are going to be the providers of the bandwidth, and they're going to get paid for that, and then the content providers will get paid perhaps separately.
But are the deals good enough for the market to still keep going on in spite of the geopolitical concerns we had? Even today, right, there was a jet that went down near the MH17 site.
Mm-hmm.
And in spite of the earnings, I'm saying earnings because the biotechnology stocks are trading 500 times the earnings. Do you not see a concern there? Do you think that the markets are acting rationally right after a huge geopolitical concern happens in various areas of the world? On Thursday, Friday, we saw the market going up. Isn't that enough for the market to go down a little?
I think the market can withstand all of this, and if there's more scares like we saw a little less than a week ago on Thursday evening into Friday, I'd be a buyer of that sort of fear. Now, just getting back to what a bubble is and what's going on, we talked about Fox and Time Warner. It makes good strategic sense. What would get me worried? Earlier this year, we had Facebook buying a private company called WhatsApp for a very large amount of money. I believe it was $17 billion. And yet, you look at the scale of Facebook, and you look at how much they paid for WhatsApp. It sounds like a huge number for a company that many of us hadn't even heard of. I'm not a WhatsApp user, so I'd never heard of it. But apparently, it's a very good way to get eyeballs, so to speak, to get people viewing the content online. It's a very useful messaging application. And therefore, it makes sense for Facebook that wants these eyeballs, that wants these viewers to buy something like that. It makes sense. Now, if Fox had come out and Rupert Murdoch had come out with Fox and said, hey, I want to buy WhatsApp for $22 billion, instead of saying, I want to maybe have interest in Time Warner, that kind of deal would have gotten me very concerned because it does not make strategic sense. It looks like a haphazard land grab, and it's not. That kind of deal would worry me and remind me of the year 2000, which seems so long ago now, but that's when Time Warner and AOL merged, which were just two big companies trying to fit together, and it was disastrous, and it was a bad sign that hubris had set in and bubble thinking had set in. I'm not seeing that here.
But
now,
yes, continue.
Now, just you raised many good points. So, biotech. We look at that and we say, yes, it is overvalued. There's great opportunities within biotech. It's very specialized. It's not the sort of thing that I think folks can chase. A lot of people were chasing the sector. A lot of people were buying biotech for the wrong reasons, and therefore we've seen this big sell-off here. I'm a little wary on biotech still. I'm wary on these large cap and small cap names that are supposed to show growth but don't have earnings and are very speculative. Now, go back to March, because I'm going to bring the Federal Reserve into this now. Bill Dudley, who's the esteemed president of the Federal Reserve Bank of New York, and is known for being very dovish and very much a fan of easy monetary policy, said something very interesting. I believe it was on March 6th. And people were scratching their heads, but if you recall, he came out and said, I think the stock market is fairly valued, except for biotech and perhaps certain social media names, and looking at other asset classes, perhaps United States farmland is overvalued. And people were scratching their heads, Mel, and thinking, why did he say this? That was a very strange thing for this very market-friendly Federal Reserve governor to say.
So did Yellen.
Exactly.
A couple days ago.
But that's just it. For these months, people said, why did he say that? And I said to myself, I said, look, and after talking to some friends, some sources, and talking to a lot of investors, thinking about it a lot, I said, this is a very deliberate part of Federal Reserve policy. This is how they're going to communicate going forward. They're going to say, you know what? Last summer, they tried to they announced a tapering of the quantitative easing and the bond purchases they were doing, and when they did that, they came out. There was a bit of a panic. Treasury yields spiked in the U.S. and then in emerging markets in places like Brazil and India, to some extent Turkey as well. There were these spikes in rates, and stock markets were affected. The Fed saw that, and maybe it should not be their responsibility to worry about how other markets are trading, and they claim that it's not their responsibility, but they do care about it because they see the contagion effects as investors are not only invested in U.S. markets, they're invested in Turkey, they're invested in Brazil. And this is going to concern them. So what does that mean? It means that even as U.S. economic data is getting better, they feel a little afraid to actually say, okay, we're going to raise rates. We're going to tighten policy. But at the same time, they realize that if they keep policy easy for too long, bubbles may appear. So
next week, we're going to have the FOMC meeting.
Right.
Is that what they're going to say? What are your expectations from next week's FOMC meeting?
My expectations are very muted. I don't see a lot new. But you mentioned how in that testimony that Janet Yellen gave last week, buried on page 20 of their biannual report, it was not part of her statement or her text, but buried in that report, there was a couple of interesting sentences. And what it said was, we remain concerned about overvaluation in certain sectors of small cap stock market, including biotech and social media. There it was in black and white. It was right there, exactly what Bill Dudley said several months ago. And everyone said, why did he say that? I'm going to maintain that this is how the Fed is going to keep markets afloat. This is how they're going to do that while also controlling some of these overvalued assets. Let's say that the bond market gets overheated as well. I would expect that Bill Dudley and Janet Yellen and Stanley Fischer and all of these other Fed luminaries that we listen to so closely are going to talk about that. They talk about the leveraged loan market in the United States. This is the new way for the Federal Reserve's communications policy. So looking ahead to next week, I don't expect much new. I don't think the statement's going to change much. We're not going to learn a lot new next week. And I'm in the camp that says that no news for now is good news, meaning the Fed's not going to get tightened. They're not going to get hawkish, even though jobs are getting better. Look, jobs got better. The unemployment, they said to us a couple of years ago, when the unemployment rate reached to 6.5% in the United States, we're going to think about raising rates. Guess what? We got to that level, and they threw it away.
That's right. Thank you so much, Michael. We have so much more to talk about, but our time is up. And thanks for the insight into next week as well. Evet, sohbetimiz burada sona erdi. Söz tekrar sizde İstanbul'da.